Good morning, traders. It is Monday, August 5th. Taking a look at the charts, we got some pretty wild price action today. Over the weekend, Berkshire Hathaway, Warren Buffett came out and talked about how they cut their Apple position by 50%, which is a pretty good bellwether indicator that things are getting ugly. Berkshire Hathaway has got like $300 billion in cash, the highest they've ever gone. They just keep raising more and more cash. I think they see the end coming just like we do. And I don't know if that's the news that's sparking all the selling. I know we've already had some selling pressure, but I think that's definitely got a lot of people spooked. A lot of people copy and follow whatever Warren does. So if he's dumping shares, then the rest of the world seems to be dumping shares today. So we have the Japanese market is down over 20% in the past two trading sessions. We've got the NASDAQ down almost 6% today. The SP 500 down 4%. The Russell down over 5%. If we take a look at the SP 500, let's just zoom in here on the futures chart. We've got, I did a measured move here, and you can see we've blown past this green line, the 100% measured move. It is completely going into a washout phase. If we take a look at the NASDAQ, the NQ futures, based on its drop today, it's actually hitting that in pre-market, the 100% measured move. Which I believe is actually a better indicator of the market's finding a bottom here, because these are the ones that are going to drive the overall market direction. We have typically stock market declines are going to end with some type of massive washout panic selling. And that is what I think we're seeing today. So we've got the markets just in free fall collapse mode. We have the VIX up 145% this morning. Look at the spike in the VIX. Let's go way back and see where we're at. You can see 2008, we got up into these levels. We've been up into these levels several times in the past. And of course, we have a ton of fear today. We'll probably see the put call ratio skyrocket. Everybody buy puts. And all this is telling us, to me, this is saying we are having a huge gap down, a washout low. This level of panic is massive. It can carry over for a couple of days, so it might not just reverse on a dime. But overall, we're going to see everybody jump ship and panic. We'll probably see our panic selling indicator be up in like the 30, 50, 100 range in the early morning minutes, I would think, which anything above 3 is extreme. So when we get up into the teens or even the 100 mark, it'll definitely indicate that there's a lot of people just dumping shares. But overall, I think the market is going to put in some type of short-term bottom and then put in a bounce and recover for a few reasons. We're going to have panics. We have panic selling. Everything is down. The dollar, gold's down 2.5%. Silver's down 6.5%. Oil is down 1.5%. What's interesting actually is utilities, XLU, is actually holding its value. It actually was trading higher earlier this morning. It's pretty much flat on the session. Which is pretty interesting. And if we take a look over at real estate, as people bail out of one asset into another, the real estate ETF is actually moving down this morning a little bit. But it's amazing how people have been moving to different assets, which has been gold and real estate, physical assets. Although IYR is a bunch of companies that hold assets, not so much. It's not really a physical play like buying a gold ETF, but we're definitely seeing people moving away from the stock market and trying to get exposure to different asset classes like real estate and physical gold. But today, everything is going down, including real estate and gold and the dollar. And that's just a perfect example of why we don't want to hold stuff during a bear market. Now, imagine when this type of price action happens week after week for months on end, and there's a naturally high level of fear. Everything just keeps bleeding lower and lower and lower, and it can drag on. And that is why we don't believe in the buy and hold, and why we don't want to hold stuff. And our strategy saw all this stuff starting to come about a week and a half ago, 2 weeks ago, which is why it says get out. There's crazy money flows, momentum is shifting, all that stuff. The only thing really trading higher today, other than the VIX, is let's just zoom in here, is the bond market. We are seeing people move into bonds as a safety defensive play. And of course, now there is actually some blood on the streets. We got some serious pain going on Wall Street. And that has got a whole bunch of people talking about how they think the Fed is going to jump in with an emergency rate cut. I find it amazing how quickly people just jump to conclusions and think, one big down day, the Fed has to change financial policies in a blink of an eye. It's just like when we're hitting new all-time highs in the stock market not that long ago, and we have a one-day pullback. Everybody thinks it's the end of the world. This is, a panic washout low, and they believe the Fed needs to jump in right away. Everybody it's crazy how sensitive people are. But anyway, that's what people are talking about, and how the Fed needs to come in and quickly save the world here. But really is just a washout. We're on the sidelines, thank goodness, and we just have to let this market shake itself out, and we'll see how it unfolds. But definitely we are seeing signs of distribution selling. We've seen it happen over and over the last several months. We're big institutions. We see high volume selling days in the stock market as a whole. Let's pull up the SPY. Overall, we keep starting to see some of these big volume selling days to the downside. We tend to see large caps have recently been moving lower, while small caps have been rocketing higher. And most of the big money is in the large cap blue chip stocks. That's where investors are, because there's liquidity, there's the volume there. And investors want dividends. They don't want to get into small cap stocks that don't pay dividends and carry tons of risk. So when money's moving out of the Magnificent Seven and large caps in general, that is not a good sign. That's a sign of distribution selling going on. And that's what we have kind of been seeing here. Let's take a look at a few other things here. Let's take a look at the dollar. The dollar is in free fall mode, pulling back. Let's just zoom out in the grand scheme of things. We've been talking about how the dollar has been trying to build this launch pad and this base for a while. We'll see how this unfolds, which way this is going to break, but we definitely I think a lot of things are going to probably have a bounce over the next little bit, but we do continue to see fear ramping up as we're an hour away from the opening bell right now. And the VIX is still continuing to climb. If we look at the VIX, so people are starting to really panic as they wake up and smell the hot coffee and then check the news stream. They're starting to really freak out of what's going on. And this is the nice thing about us being on the sidelines. In fact, we're going to watch our accounts inch higher with our build position with no downside risk, while everybody else is losing their shirts today. And really over the last several days since we got out of the market, we continue to just inch our way up. Just like we did in COVID, we got out and we made money, closed out a nice profitable gain before COVID. COVID hit. A couple of days later, the market fell and collapsed, and we just kept growing our account. We were in bonds, and then we moved to BIL, and that was pretty amazing for us to sit on the sidelines while this type of stuff happens. And this is the difference of being able to follow the market internals to see when things are shifting and cycles and all that stuff. Is the market usually gives us these signals a few days before the trend really changes gears, and that's what we've done with our strategies here. Overall, if we take a look, let's just go back to the hot list real quick. We do have kind of smaller cap stocks near the top: real estate, banking, home builders. It's going to be interesting to see how all of these move today. We do have gold miners. Let's actually go take a look at gold real quick, and silver and miners. We have gold pulling back, and this is a perfect example of why when there's serious, real panic in the market, really almost nothing can buck the trend. And we're seeing gold down. We've got silver down 6.25%, so it's picking up speed to the downside. If we go to gold miners, like GDX, which is the slower of them, it's down about 7% or so from yesterday's close. So we're going to see a pretty big move. That is down at 34.12, way down here. So it's right back down the lower end of that range. That's why we were in SILJ. This is a great example, again, of why we don't want to hold on to things. We were in SILJ. It's down at 1040, somewhere down here. It is way down here now. This is why we don't want to hold on to things. No matter how much we like a sector or commodity or whatever it is, there's no point in holding it if it's going down. We can always buy back later. It takes 2 seconds to buy back in. It doesn't matter if we buy back in at a lower price or a higher price later. We can get in whenever we want. But if this market does continue to sell off, we're going to see miners and everything get hit very, very hard, just like we have every other bear market and big correction in the equities space. If we take a look at the weekly chart of the SP 500, the major trends going way back here, in the grand scheme of things, we are having a sharp pullback. We have seen many of these pullbacks before, over and over and over again, all the way back. It doesn't mean the bear market is starting. It just means we're having a pretty decent pullback and correction in the market. We've seen them all through the last several years, and of course, way before this. So we'll see if this market puts in some type of washout low this week and bounces and recovers, or what. I do feel like the market should do that based on the fear, the level of panic selling today across the board. But it could carry over into today. We might see a big washout low, maybe carry over to tomorrow. Sometimes panic fear like this will bleed over for 1 to 3 days. It doesn't mean it'll waterfall sell off like this for 3 more days. It just means it could continue to stay down near these lows and keep poking to nominal new lows as people keep dumping shares, and eventually it'll have a knee-jerk reaction, bounce and rally. And then after that, however that bounce or rally plays out will be an indication of, is it a bearish pattern or is it a bullish recovery? Is money piling back in and we get a new long signal? And this is just a cleanse of the market, just like we saw not that long ago when we zoom in here. We had this cleanse of the market. We got in and we played this move up. This could be the exact same thing. So don't think the sky is falling just yet, because our long-term trend hasn't fully flipped, although it is showing some pretty good weakness behind the scenes. But we are still in a rising bullish, somewhat bullish phase as a long-term investor point of view. Anyways, I think that's about it for now. I think the key takeaway for today, the NASDAQ leads the way in terms of it's the heavy techs that are doing everything. So if I was to give you any kind of core insight, I would say we've had the sell-off, we've had the bounce, we've had the 100% measured move on the NASDAQ as of this morning. I would think we're going to start to see the market flush out for maybe a day or two, but then have some type of bounce or form a bear flag before potentially selling off again. But I do think most of the downside is pretty much done in terms of right now. I think the SP 500 has blown past its 100% measured move, so it's flushing out as well. I haven't looked at the Russell 2000, but it has completely fallen out of bed. We've been talking about this for a while here, the squeeze pop to the upside. In fact, on the weekly chart, it's this whole pop to the upside is indicating that we're going to see some type of huge sell-off and just around the corner. And then XLU, we also talked about this week how XLU has been rocketing higher while the stock market has been going lower. And whenever we see the size of divergence that we've seen, which is like a 12% spread, the stock market usually crashes shortly after, and eventually the utilities will crash with it, but they hold up. And so all these things have come full circle, full light, and they're all unfolding now. And now we've got this crazy wild spike of fear. The VIX keeps going up 175% now this morning. And people are going to lose their shirts this morning and bail out near a low, and the market's probably going to rebound and recover for a few days or a couple of weeks. But this is definitely a warning sign, a shot across the bow that there is some big selling going on, and Buffett is unloading some of his massive tech, which is Apple. Anyways, that's it for now. Take care. Bye-bye.